In today's training, you're going to learn my untold secret to trading the inverted head and shoulders pattern. Now, while watching this training video, I want you to keep in mind that every trader is different. So I'm going to talk about the traditional way of how we're taught this pattern, but also kind of show you my spin on it. I am Kenya from BK Forex Academy. We help new and struggling Forex traders learn how to trade with structure and guidance so that you start the right way, have a breakthrough, and trade with confidence. Do me a favor, hit that like button, subscribe, and turn on notifications, and let's get right into the video. The first thing that I want you to know is that chart patterns occur on your chart when the price of an asset moves in a way that resembles a common shape. So for example, you'll see on the 4-hour of GBP USD, previously we had a bearish trend. And in this bearish trend, I can identify a particular trading pattern called a bearish flag pattern. So in a bearish flag pattern, this is a bearish continuation pattern where when we see the breakout of the flag, we look for an opportunity to go short. So that is a particular chart pattern. You'll also see, for example, maybe a double top or a double bottom if you've heard of that particular type of chart pattern. But in this case, we're talking about the inverted head and shoulder. Now, the inverted head and shoulder simply looks like this. You have a left shoulder, you have the head, and you have a right shoulder. The opposite of this particular pattern, it actually gets its name from the actual head and shoulder pattern, which forms in an uptrend. So you'll see you have a left shoulder, you then have a head, and then you have a right shoulder. Probably not the best drawing, but you get the point. Okay, so that is that. But we're talking about the inverted head and shoulder. So these patterns are a visual way to trade, and they provide a logical entry point, a price target for a profitable trade, and also a strategic way to manage your risk. So this is why I like the inverted head and shoulder. And basically, it's an example of a bullish reversal pattern. So you can see this means the price action and trend that occurred before this pattern developed was bearish. So again, like I said, you can see looking here what the price is doing now, look previously how this trend was a bearish move. All right, so that's what you're going to notice. This pattern often shows up at the bottom of a move in the market and will show 3 lows. So as I pointed out, these 3 lows are here. This is your first low where you have your first inverted shoulder. You then have the head and the right shoulder. You will see this particular pattern on all time frames. So it's up to you as to which time frame you want to identify it and trade it. But basically, this helps you with your entry levels, your stop levels, and also targets to make this pattern very easy to implement. So step 1, the very first part of this pattern is the downtrend. So with the inverted head and shoulders, you want to see a very strong, substantial move downward. And then what happens is this extended move lower actually leads to exhaustion. So let's go quickly to the daily, and you can see on the daily how this actually has an M4 or like an overextended double top. And you can see the market came and broke lower than this previous low. And now it has come to an area on our chart where it decided not to move lower. It started to show some exhaustion. So the longer the downtrend, the more substantial the reversal is likely to be. And step 2, what you want to do is you want to identify your left shoulder. So the market moves to form a lower low, and at this point things are starting to come together. So this is here, right here. So things are coming together, but we don't have enough to draw the neckline, which is where I have this gray zone marked here. This is our current neckline right here. All right, so we have to wait and let the pattern come together. So once you see that you have a left shoulder and then or a left inverted shoulder, and then it makes another move lower, but it doesn't want to go any lower, this is where your head forms. So this would be step 3, your inverted head. So now that the left inverted shoulder has formed, the market makes a lower low to form the head. But despite the bearish rally, sellers are unable to make a substantial move lower. Okay, you can see that. So you can see how the price kind of stalled right here to form support. right? And then what has it done? It has continued to move higher. So at this point, the neckline is beginning to take shape, but not just yet. We need to wait and we need to draw the actual neckline on our chart. So what we want to do is we wait for the right shoulder or inverted shoulder to come together. So that would be this area here. And this is where things start to come together. This is an indication that sellers are tiring and the market may be gearing up for a reversal. So it's best to think of this as a rough draft rather than a final version. So the next thing we want to do is we want to draw our neckline, and that is where we have our neckline here. You see that? So one of the things that may happen is that you will see this pattern coming together and you might miss it. So just know that there is a backup plan for that. But the neckline is used as a strategic support and resistance to help the trader define. So look here, we have resistance, we also have resistance, and we also have resistance multiple times. So this area is used as a strategic area to help the trader define the area of entry. So we want to wait for the breakout of the neckline, and then we want to determine the trend. So now that we have a break of structure, we also can determine the trend. Now we can draw our trend line the opposite direction. Okay, and a few things I look for in trending markets is, especially if I have a trend line, I do want to see that I have at least 2 touches to my trend line. And you can see here our bottom trend line support actually has a touch here and also a touch here. And now I have a touch here and I also have a slight touch here. So I can basically move this down a little bit. And now we have a trend that's forming, right? So the next thing we want to do is we want to gear up for our entry. So if we're going to gear up for our entry, if we miss the breakout, what do you think we should do? Pause this video and answer in the comments. What do we do after a breakout? Let me know in the comments. Okay. If you said a retest, ideally, yes, we want to wait for a retest. Now, there's a few things you could have done. You could have used a buy stop here so that if you miss the trade, then you can use a buy stop. But if you miss it altogether, you can see on my chart right now, I actually have an alert. I have an alert so that what I'd like to see is for price to move back into this neckline, and then I would consider my entry for a potential move higher. All right. So that's how you want to trade this. So for your entry, you want to wait for price to move higher than the neckline. And after the right shoulder is formed, you want to wait for a pullback to the neckline. Next is we want to consider our stop loss. So traditionally, our stop loss is placed below the right shoulder after the neckline is penetrated. So this is the right shoulder. And if we get in right here where I have my alert, we can just take our ruler and we can measure. So let's say we got in at about 32.07. If we drop our stop below the right shoulder, that's roughly about 90 or 95 pips or so. So one thing that I do honestly is I do wait for, so if I spot this after it happens, I'm like, great, I have an inverted head and shoulder. Let me look for a potential bullish setup. But however, sometimes if I see the actual pattern shaping and coming together, I will consider a entry here. So we are taught traditionally to wait for the actual pattern to develop. And the reason being is because it might not develop all the way. This pattern could fail and we could easily see the market move lower. But what I like about doing it this way is that I'm a risk taker as well. So if I take the risk of entering at this support, I like that my stop loss is actually very minimal and strategic. So for example, I would have placed my stop loss a few pips below this right shoulder, maybe about 35 to 40 pips or so. And then I'd look at my potential profit target. So looking at this, one of the ways that we take profit, the most common, is the distance between the actual neckline and the peak. So our next peak would be resistance right here, which is a 200 pip move. That is very substantial. So that is exactly what you want. Every trader is different, so you're going to have to decide how you would like to trade this. Some traders might want to get in with multiple positions, and maybe they take profit back. If they got in here at the neckline, maybe their first profit target would be here at previous support slash resistance, and then maybe their next target would be midway of that. So if you're trading with multiple positions, maybe your profit target would be a little bit different as you scale out profits. But your ultimate target, if I were going to get in here at support, I'd be risking only about 40 pips to make potentially 200 pips. That is amazing. But if I even traded this in the traditional manner, where I simply just wait for the breakout and then I wait for a retest, if I have a 90 pip stop loss for a potential 200 pip gain, that is an excellent risk to reward ratio, in my opinion. I'd be making just twice as what I potentially stand to lose. So that is the whole strategy of trading the inverted head and shoulders. Let me know in the comments, what are your thoughts about this particular pattern? Do you like it? Is it hard for you to identify it? And how do you trade it? Do you wait for a breakout of the neckline, or do you actually take the risk sometimes, maybe like I would? Let me know. I'd be curious to know your thoughts. Now, what I recommend is that you go and demo this particular pattern when you see it and note exactly what happens and then record your results. All right. I hope you enjoyed this video. I'm Kenya from BK Forex Academy. We help new and struggling traders learn how to trade with structure and guidance so that you have a breakthrough, that you trade confidently, and you trade the right way. Look in the description below. You'll see all of our information, and I will see you guys in the next training video. Thank you so much for watching.